with his 2024 playbook. I mean, what a difference 24 hours makes. Yesterday, you graciously called in to try and make sense of what was happening. Here we have a nice little reversal. So let's just cancel each other out these last 24 hours. What's in store for the new year, do you think?
I think good things are in store. Right now we obviously have a bull market in the S&P, the NASDAQ. It seems like the Russell just entered a bull market. We have a bull market in bonds that nobody seems to be talking about, and that's globally as inflation seems to be going down faster than many central banks even anticipated themselves. So every day, not only do we have higher highs in markets, especially here in the United States, but we also see lower yields across the globe. And that's really what's powering the rally right now, and that'll be a positive going into 2024.
You talking about an everything rally. I mean, that's what it sure sounds like.
It feels that way, yeah. Remember, right now, the Fed is at 5 3/8 basically on the Fed funds, and twos are about 4.5, and tens are under 4. So they have to do a lot of easing just to stay kind of where they are, not even getting into an easier state. So in order to get into an easier state, the Fed would have to cut Fed funds all the way down below the twos, and almost 200 basis points, really. So that would be a lot of easing, and I'm sure Jay Powell does not want to have a soft landing turn into a crash landing going into election year. So that's what we're facing right now. But again, break evens are around 2%. So to stay this tight, this is the first time the Fed hiked into a financial crisis like we had with the regional banks in the spring. So that was a big thing, and that was one of the first times they ever did that. So they did a good job getting inflation down. Obviously, supply chain helped a lot with that. It was not the 1970s, as so many people said. And also, inflation seems to be transitory around the world. Again, we're seeing good numbers in the UK. Some people, PIMCO said that United Kingdom was going to go into a recession possibly in 2024. So central banks around the world are speaking dovish, and that's good for markets.
Yeah, I mean, you don't think we're getting ahead of ourselves in any way about what might happen with these central banks and rate cuts?
No, I don't think so. I think basically Powell validated where the market was in the future. So he just basically kind of validated that. And remember, we go back to the supertanker analogy. They can't wait until they see unemployment tick up or some other thing on the horizon that's not foreseen go into the data. They kind of have to react before the data, and to get the market back to where the market's pricing. The Fed, they're just basically put themselves in line where the market is. So, again, we spoke in October, if the Fed cuts 50 basis points twice, is that 4 cuts or 2 cuts, right? So when they cut usually in larger increments than when they tighten 25 basis points a shot. And again, where they are staying with inflation falling so precipitously, that makes them even tighter, and financial conditions get tighter as they do nothing. So They're just validating where the market pricing was. And remember, the futures market vacillates a lot because in an easing cycle, they're going to price the future rate hikes to come into the market. So that's why people get so panicked. They're pricing it so much, but in reality, they're not. So that's the other positive.
I mean, what the bear case is, right? There are still bears left. It feels like, some have obviously turned into bulls as the market has ripped. Eric Johnston, for example, Cantor Fitzgerald, he's sort of sticking to his point of view that we're still going to have problems. I want you to listen to what he told me a couple days ago and get your response since you're so bullish. Here's what he told me.
I would not be able to come here and say high conviction bullish based on the current multiples, where we are in the cycle, where earnings are, where positioning are. It's just not even close. Okay, what I would need is to see either a recession or close to a recession where people think that it's coming. We get a big growth scare, and the unemployment rate starts to go above 4%, a little bit of a cleansing, and lower prices.
How do you counter that?
I think bond guys always want a recession, basically, especially bond salesmen, so that's not a surprise. He's been bearish for quite a long time. I think that, you really have to, what are the markets telling me? I don't care what he's saying. I care what global yields are telling me. So global yields right now, again, every morning we come in, there's a whiteout, which means lower yields are happening across the globe. So the market's telling us something. If we say, well, that's just hubris. If I'm going to say, well, I'm not going to listen to what the market's telling me, I'm just going to believe in my mantra, then that's problematic, and that's how you lose money. So basically, the trend is your friend. Right now, the trend is up in stocks. We're in a bull market. It just started. The NASDAQ bull market started in March. The S&P bull market started in June, and we're just on the verge of a Russell bull market that's just about to happen. So small caps really like, and mid caps really like easing conditions by the Fed. A lot of people expected a recession. They were talking about the recession for 2 years, so I can't believe he's saying that again.